Greetings. I'm very happy to see you here today. Welcome to my weekend market recap, 9th March 2024. I'm Sagar Nandi, retired IT professional, swing trading stocks for a living. How I swing trade is to find trades where the technical strength is aligned with other dimensions like the preferred trading direction in the market, sector industry rotation strength, fundamental strength, and even seasonality strength if that is applicable. That gives me truly high probability trades, and I regularly share such trading ideas live before knowing the results on my website superiorprofit.co, X handle Superior Profit, and also this YouTube channel videos on my channel Trading Profitably. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I use all these Q components. I'll not go through the description of all of them. I'll use many of them in today's session as well. All the Q components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. Let's continue with the live system. First, a look at the dollar index. In the last market recap, I showed that there was a triangle pattern in dollar at that time, created by trendline support and trendline resistance. And I mentioned that I will wait for it to break to the upside or downside before deciding my directional preference. And I also mentioned that if it breaks down, which indeed happened, that would be bullish for the market. And the market also expectedly went up. Dollar broke down below the trendline resistance, below the trendline support, below the triangle pattern in daily, and from the trendline resistance in weekly. The trendline resistance in weekly proved more powerful than the trendline support in daily. Now I see that dollar index is at lower boundary with a bullish indecision. So I will not be looking to short a chart like that. I would be shorting it right at the point of breakdown using the breakout short setup that would have given a profitable trade by Friday. Now I will not short, but I will not buy also, because the indecision signal itself is not a buy signal. It is a signal not to short, but it is not a signal for buying. Dollar came down, that proved bullish to the market. If we look at the internals using Q edge, that is the sector industry stock advanced decline breadth from month 1 to day 1, the picture is remaining very bullish. Green across the board, less green on Friday, but still green across the board. You could say that the greenness is reducing gradually. That would be a correct observation, but still it is overall more green than red. And if you care to check out the same snapshot from last week's market recap, you'd see it has not changed much. The look and feel of the sector industry stock breadth remains same bullish as it was 1 week ago. But under the hood, something has changed. I will come to that. But before that, let's see. In fact, this is also one of the things under the hood that changed. The bucket analysis. Majority of stocks are still above mid Bollinger Band. So it is bullish. This has not changed. What has changed is the percentage of stocks above upper Bollinger Band that has come down. In fact, I think on Thursday or Friday it hit somewhere around 25%, 20%, 20 to 25%. It hit in real-time charts. What hit 20 to 25% in real-time charts? That is the percentage of stocks above upper Bollinger Band. Which stocks? S&P 1500 stocks. At the close of Friday, however, that percentage came down from 2025 to 7%. So a lot of the stocks came down, but came down from where? Came down from above upper Bollinger Band. So the overbought nature of the market reduced, but it is still remaining bullish. That is what we see from the bucket analysis, and that is what we saw also from sector industry stock breadth. Now this overbought nature of the market reduced, that is more evident if we have some signals like if we have some signals that shows us reversal from the top, and there is a signal like that in Q Finder. In fact, several. Let's go to that. Red candle high that represents red, that is bearish candle at a higher price level. One red candle high is a signal appearing in one stock. We don't infer much from that. However, Q Finder has aggregate technical breadth, that is also breadth inside, very powerful and useful and profitable if we use them properly. And that shows the percentage of stocks displaying red candle high. Whenever that hits around 10% or more, that is a significant breadth signal, bearish signal at the top. Not bearish signal in a downtrend, but bearish signal at the top. When that hits the threshold, this cell lights up, warning us that we have a large amount of reversal from the top. There is another unique signal that catches or tries to catch the very top of moves, that is the unique headwind signal that also hit the threshold level, and whenever the threshold is hit, once again this cell lights up with red color. So we have two signals showing reversal at the top. And we can see on Friday the overall breadth, technical breadth, is also bearish. Not only overall across all signals, but across individual categories also, they are all bearish. Which one is most bearish is the reversal category, 93%. So all of these analyses that I showed so far, that are pointing to a scenario. What scenario? That a large number of reversals are happening from the top. We can see that from bucket analysis earlier. We can see that from red candle high. We can see that from bearish headwinds. We can see that from percentage of reversal signals being 93%. That is the Friday's technical breadth. The weekly breadth is still remaining bullish. This is in sync with the sector industry stock breadth that we saw, that was overall bullish, and that weekly technical breadth is bullish. However, once again the percentage of headwinds, the unique reversal at the top signal, has hit the threshold. So we have plenty of reversal at the top signals. That is something that has changed. However, the trend line supports that I talked about in the last market recap, they have not broken. Let's look at the market ETFs now, market external view. SPY. Let me use Q Global because I also want to point out to the additional momentum signals which has the red candle high pattern. I could do this in TraceStation also, but that's fine. Let's do it on Metastock. Instantly we see something, several things in fact. One is that the trend line supports that I talked about in the last market recap, they have not broken. So it is not possible to short as far as SPY is concerned. However, we see the bearish headwind. Remember the bearish headwind in many daily charts and also in aggregate weekly bearish headwinds have crossed threshold, and we see the same bearish headwind is in SPY, not only in daily but in weekly as well. But we have to wait for the trend line supports to be broken. In fact, many of them, 3 of them to be broken before starting to take short trades as far as SPY is concerned. And here we see the red candle high. So red candle high and bearish headwind came in many stocks, it came in SPY also. It's a cautionary signal. There is no bearish pattern for taking short trades in SPY. If you in the weekly market recap, I don't look at all the signals in detail, but you will notice that on Friday price came down with high volume with bear release. So there are some bearish signals, but again the trend line support is not broken, so you don't short. If we look at IWM small cap ETF, here also the trend line support in daily as well as weekly, they have not broken. We see the red candle high coming in IWM as well. In IWM, even if this trend line support is broken, there is an ascending yellow direction line, then another trend line support. So it will be not possible to short IWM so easily. But individual small cap stocks may give shorting opportunities before the IWM gives that, but not yet. Dia, in the last market recap, I mentioned that it was closest to the trend line support, and that is the power of the Q systems. You can anticipate something and then they often come true, giving you an opportunity to trade in your anticipated direction. In the last market recap, I mentioned that Dia was closest to the trend line support. This was the trend line support at that time, 5 days ago in last market recap. It was closest to the trend line support, and I mentioned it might break below trend line support before the other market ETFs. Exactly that same thing happened. It broke below the trend line support. In the last market recap, there was no trend line resistance. Now there is trend line resistance as well. I in fact tweeted about it, if I remember correctly, and you could use this breakdown of support and formation of trend line resistance as an indication that it is changing nature. What nature? It is changing from an uptrend to downtrend. Presence of trendline resistance, no trendline support, shows that now it is in a downtrend. Trendlines are very powerful analytical tools. They are very powerful trade entry tools also. If you use that, you could short Dia right at the very top on Friday using fine-tuned intraday chart when it came right to the trendline resistance and reversed from there. It is looking quite bearish with a bearish shape, bearish color on Friday. Let's go back to the multi-chart template. We don't have the historical trend lines in Q Global on Metastock, but we can see the trend line resistance. We also see, in fact, a flow short setup. So we have a unique case. It is coming in one of the market ETFs after many months that an instrument has finally changed from uptrend to downtrend, and we have a trend following short setup that is meeting all the checklist conditions. So Dia is giving a short setup. That's good. Good to know. This is exactly what I mentioned in the last market recon. That's the value, power, and profitability of Q systems. And if we look at QQQ, again, the trend line supports are not broken. Trend is intact. We are not able to short any of the market ETFs except Dia. Nice analysis last week, isn't it? We have a bearish headwind in weekly and we have a red candle high in daily. So we have concern reversal at the top signals but no downtrend anywhere other than Dia. Well, that is the external view. The external view of the market, sector industry, stock breadth, technical breadth, all are in sync. When they are in sync, it is easier to trade. And the conclusion so far is, let's look for industrial stocks to short. Which kind of short setup? Maybe trend following setup, because Dia itself has given trend following short setup. If that is the case, why not I try to look at the industrials constituents using Q index. While it is doing that, retrieving constituents for Dow Jones Industrials Index from Refinitiv, let me go and have a look at the market internals. Using the extremely powerful single chart USA market breadth total view. For many weeks, I was noticing and sharing the Hindenburg clusters and the Bango signals, thanks to Mr. Ian Woodward, may him rest in peace. Bango also came on these cyan color Hindenburgs. If the Hindenburgs are cyan, that means it was a Hindenburg confirmed plus Bango. So we had plenty of Hindenburgs and Bangos, but no downtrend yet. If we look at this total view using weekly daily, we see for the total view also the daily trend is intact, weekly trend is intact. The weekly trend line support is holding very well. Every time it goes to the trend line support, precisely it bounces up from there. That means when it will break, and one day it will break for sure, that will also be significant. You may keep an eye on that. The moment it happens, we may be ready to short the market overall, because this is an index of indexes, the broadest view of the market technically. We also notice the unique headwind reversal signal came in daily and weekly, both cautionary signal. We also have red candle high. So the technical breadth reversal signals we saw appeared in individual stocks. Now we see the same red candle high and bearish headwind came in many market ETFs and even in total view. So we have looked at the external view of the market, internal view of the market. What is our conclusion? My conclusion is that it is not time yet to short looking at the overall market, and it is not the time to buy because we have too many reversals at the top. I am therefore going to look to buy stocks that are defensive stocks. And the defensive stock, the one that I mentioned earlier in market recaps that I told as a longer term hold for me, that is acting very well. That is MO Altria. Here once again we see the power of my puppy Coffee came and he's missing me probably. I miss him too. Sorry about that. Okay, coming back to the chart, MO Altria, we see once again the power of the trend line support. There are trend line supports in several other systems, but I think nothing can help us in trading profitably more than the Q trend line supports. The weekly trend line support and this daily support held extremely well, created a beautiful false downside breakout, which is even more powerful than simply holding the trend line support. It stopped out weak hands, not me. I already explained earlier that I was going to hold it without applying stop because it had very high dividend yield. This is a very bullish pattern and it is a defensive stock, very defensive stock, very high dividend yield. So if my defensive stock is working well, that means it may not be the time to buy a lot of growth stocks. During the weekend, sometimes Refinitiv is very slow in responding, and I can see that now. It's taking time to retrieve the data of Dow Jones Industrials constituents. In fact, I received an email also from one gentleman. He's having some issues with retrieving data. That's fine. I can do without that. What I can do then, let me try to calculate a stock scorecard. Not sure if that will get response from. I'm thinking how to do it if Refinitiv is not responding properly. Let's try to calculate the mid-price stock scorecard. But while I try that, I also start with technical setups. I see a lot of reversal signals at the top. Headwind reversals as well as red candle high. And I am now demonstrating how to combine all these signals together. So aligning more and more probabilities in favor of our trades. Let's go to the bearish tab. Look for all the headwind signals. Flag for them 27 signals. So with one click I can reduce from thousands of liquid stocks to only 27 stocks, showing what? Reversal at the top. Now I see from price extreme level, some are in price extreme middle. A single click on the green paint bar. Now I have stocks at price extreme high giving headwind reversal. I see some of them also have bearish indecision. That's nice. Let me highlight those 12, and now I am going to cross-reference them with the momentum signals to see how many of them have red candle high 7. So what have I done? I have seen overall from different angles that market is at a high level in an uptrend, but there are reversal signals at the top. So I wanted to look at some of those stocks. So from thousands of liquid stocks, I chose the stock showing the unique Q headwind reversal signal. Also selected only those stocks at price extreme high, and now again selected stocks only with red candle high. That left me with only 7 stocks. Now I can open these 7 stocks. Let me do that. Now because they are at a price extreme high, they have reversal signals, but they may not have proper setup. Q headwind signal is not same as Q headwind short setup. So we'll look for a setup. First, let me scroll through these 7 stocks and keep only those where I see some possibility of shorting. So this one I'm going to keep. I'll come back to the stocks I'm keeping. This one I'm going to keep. This one I'm going to close. This one I'm going to keep. This one I'm going to close. This one I'm going to close. This one I'm going to close, but I am keeping it to explain one thing, that I'm I am actually going to close it, but without opening weekly, I can anticipate something. But let me explain that later, come back to it. This one I'm going to close also. Okay, let me first come to the stock. I said I'm going to close, but didn't close to explain why I was going to close. This has a bearish headwind, but I was trying to close it, thinking of closing it, because looking at this straight move up, I am thinking, I'll validate that, I'm thinking that it is unlikely that weekly will meet the checklist conditions for a headwind short setup. Let's find that out using the weekly daily template. Indeed, we have a headwind signal, but the weekly requirement for headwind setup is either to have a yellow candle or a bearish shape candle. None of them are true. So sometimes after you use the Q systems for a long time, when you see a daily pattern moving straight up like this, you know the weekly is very unlikely, possible but very unlikely to have a yellow candle, neutral candle, because it's going straight up in daily, and also unlikely that weekly will have a bearish shape candle. You can anticipate that, and by doing that you may ignore that stock, not waste time. Again, of course, wasting time is only matter of seconds, but that's fine. I have now two stocks left. Let me try to cover this one first. It is PAGP. And again, here also the weekly is not meeting the checklist conditions for a headwind short setup. We have red candle high, we have bearish headwind, the same signals that we saw in technical breadth, the same signals that I filtered for, but it doesn't have a short setup, so I'm going to close it. Even if I don't get a trade setup, that is fine. It has certain value. First is practice that makes you automatic when the actual setup is confirmed, and second, you remember headwind has two purposes. One is to take the short setup if a setup is confirmed, but also if the setup is not there, another use is to protect profit in existing long positions with trailing stop. So seeing all this reversal at the top signals, in fact also cluster of indecisions, too many indecisions at the top, also multiple bearish headwinds, red candle high. What you could do, you could switch to the template for protecting long position, and you could apply trailing stop on longs that you are holding already, hopefully in a profit. Okay, let's close that. Now I am left with one single stock, and that stock has a trade setup. Even before opening weekly daily, I can say that. Now if we apply the checklist conditions for headwind short setup, the weekly is not meeting that checklist condition, because weekly is neither yellow nor bearish shape. But even before opening weekly, I said we could still have a short setup because it is breaking down below trendline support. With reversal signals, multiple, one is the bearish headwind, one is the red candle high, one is also reversal candle at price extreme high. If we open commentary, I'm expecting it to show a breakdown short setup or breakout short setup. Yes. So breakout short setup is confirmed. It doesn't have any requirement on the weekly. Headwind setup is there in daily, but the weekly is not meeting the checklist condition. So we have a breakout short setup at some lucrative price pattern. One is price extreme high, one is bearish indecision pattern. So if that is true, I may trade it using long put. That is the only time when I may use naked options, that is to short a stock at very high price level. Of course, to be on the safe side, it is always possible to trade it using short call vertical. Now, whether I use options or stocks will be decided by whether the options are liquid enough. Now, market is closed. If it is liquid enough, the bid-ask spread will be narrow. You may look at that during market hours. Stellantis, this is stock is Stellantis, STLA. Now, notice this pattern. This is what the market looks like at a very high price level, showing some reversals at the top, multiple signals, but it is not downtrending yet. And unlike the market ETFs, SPY, QQQ, IWM, this is breaking down below support. So that is how before the market breaks down, some individual stocks will break down first, and those are the weaker candidates. Yes, it is still in very much uptrend, it is following market, but if I had to short between market ETFs and this stock, I would rather short this stock. But before I do actually take a short trade, I would like to, well, I see that Vital is not able to retrieve data for those stocks also. Let me try for STLA. Let me see if STLA is part of S&P 1500, then I can get the scorecard from QEdge without waiting for real-time data. No, it is not part of S&P 1500. Stellantis, STLA, isn't it an automobile company? Give me 1 second, I check that out, please. Excuse me, sorry about that. I checked out the industry for Stellantis. It is indeed automobiles. So, okay, it is not retrieving the data for fundamental scorecard, but I could still check out the industry score from QH. Let's check all of them. The automobile manufacturers is weak. So that allows shorting. Whether we look at auto manufacturer, automotive parts and equipment, I think our STLA, Stellantis, is auto manufacturer. So that is clearly telling us the industry is allowing us to short. I am not able to generate the scorecard now. Refinitiv is not responding. That's fine. We have many hours before the market opens. I will check that out and you may check that out yourself. If the fundamentals have some reason to short, what reason could it be? It could be overvalued, it is at a very high price level, or it could be having negative earnings growth. If not negative earnings growth, at least slowing earnings growth. Because we are trying to short it at the very top, a slowing earnings growth will also be a reason enough to take a low risk entry, and indeed here the risk is very low. The stop would be just above Friday's high. Now in this case, because the market is not bearish yet, even if I found it at the close on Friday, I would not enter the trade on Friday because the market is still very bullish. Trendline supports have not broken. In that case, my approach is to identify the stock and then try to enter it on Monday using precise entry fine-tune chart. So that I will try on Monday. Stellantis, let me take a note of that. MO is looking good, isn't it? Okay, I saved Stellantis. So I explained how I go about combining multiple signals from QFinder. I have some time. Let me also explain how I do top-down analysis. Every weekend recap, I don't cover everything. Let's go to Q Edge, start with the sector scorecard. Because market is at a very high price level, let me look for shorting opportunities. I am looking for the weakest two sectors or the most decelerating two sectors. So that will be weakest ones. Infotech, isn't it interesting? It was the strongest a while ago, now it is the weakest. That's good place to look for shorts. Materials is also the second weakest, and the most decelerating are com services and healthcare. So I have selected these four sectors, two of them weakest, two of them most decelerating. Let's drill down into stocks. Because I am not able to generate the scorecard for liquid stocks, let me just drill down to S&P 1500 stocks. The scorecard is already here in Q Edge. Let me straight away look for stocks that are down by at least 1%. I use this down solid down filter. So I have many stocks. How many stocks in S&P 1500 went down by at least 1% or more on Friday? That is 148 stocks. All of them are down. I'm going to look for a reason to short them fundamentally using the one star red button, that is overvalued or negative earnings growth. I am left with 69 stocks. Fundamentally, I'm allowed to short them. Industry score wise, I'm allowed to short them. Now let me check out their possible technical setups using QFinder. Single click. Pure top-down analysis and look at the bearish patterns. I'm clicking this button to look only for stocks that have at least one or more Q short setup. I'm now left with 14 stocks. So what did I do? Started with sector analysis, found the weakest sectors in terms of score or deceleration, then looked at their stocks. I didn't look at their industries. Well, strictly speaking, I should have looked at their industries, isn't it? Let me go back. That's fine. Sometimes we mix up. Okay. I again went to the sectors instead of going to the stocks directly, which you could do if you are just doing sector level analysis. And let me also divert a little bit. Under which situations would you go from sectors to stocks directly instead of going to industries first? That is, if you are doing this top-down analysis in countries where the market is not so deep and broad like USA is, then the sector level is probably enough to drill down into stocks from there, because individual industries may not be there so much. For example, Thailand. Yes, Thailand is available as one of the countries for QH. For the other countries, Australia, China, India, Japan, UK, USA, they are deep and broad enough to make us go to industry score, not just go to stocks from sector, but for Thailand I may do that. In any case, now I'm looking at USA. So from the weakest sectors, let me go to the industries first. Again, look for the weakest industries, bottom 20%, and I may select some of the most decelerating industries also. Control click. You could do step by step also. Now during market recap to save time, I selected them together. Now I'm drilling down to the stock. So sector to industry to stock, down by at least 1%, at least 1 star. Red, that is either overvalued. Here all these stocks are overvalued, or with negative earnings growth in the last quarter, that is 1 star red here. Now I'm going to cross check with technical breadth. I'm left with 14 stocks. Great, isn't not come here. Left with 25 stocks, but if I click the trade setups button, then I'm left with only 10 stocks. So in S&P 1500, I have these 10 stocks. What are they? They are in the weakest sectors, in weakest industries, with some weak fundamental, either in terms of valuation or growth, and they have a possible Q short setup. Not many, isn't it? And that's what we would expect, because the market is still very bullish. We have reversals at the top, but the market is still in a solid uptrend. We don't expect a lot of nice looking short candidates, but we have a few. So let's look at them. Interestingly, even before opening, we can see Nvidia, Microchip, Micron, maybe some more also, semiconductor stocks. That's fine. Let's look at them one by one or together. Let me use Q Elite on TradeStation. I don't want TradeStation to feel left out. Nvidia, very sharp reversal with bear release, big move down 3, not at jump thrust high, only jump high, not thrust high yet. Reversal candle at price extreme high, release signal. Bearish pressure. So lot of bearish momentum with very high volume down move, but it is down in only one day, on Friday only, still in an uptrend. I'm not going to short a stock whose chart looks like that. I'll not buy it, Nvidia now. Let's see if I have a proper short setup like we found in Stellantis. This one is better, Microchip. I'm using the power of the trendline resistances in weekly here as well as daily. In fact, looking on Thursday's candle, price was right here at the trendline resistance in both weekly daily. You could look to short it right at the open, near the open on Friday using precision entry chart, and you'd end up with a large profit. Probably, provided we had a low risk short entry using the precision entry chart. Let's check that out in the morning session using pivot chart. 5-minute interval in the morning session. Let the pivot lines be drawn by the system. Fantastic. We indeed had a very low risk early range. So early range high, early range low were drawn. Previous day's close was right at weekly and daily trendline resistance. So you would be ready to short if price went below early range low with a narrow enough range. This range was narrow enough. Relative to what? Relative to previous day's price moves. So we would short right at this point when the first 5-minute candle closed below early range low. Our stop would be above early range high. It was never approached. When price came here, if you extended this previous day's pivot to the right mentally, when price came here, the risk was already covered. So we would, following discipline, if we followed Q Systems guidelines, we would book at least partial profit and leave the rest with trailing stop. You could leave it at original stop or you could use trailing stop. I would rather use original stop for the remaining position. For day trading tends to be quite volatile in intraday charts, and by the close of the day it closed very bearishly, and I would look at weekly daily. Looking at that, I would not have any reason to exit the remaining position. So it has a beautiful bounce down from trendline resistance with bear release, bearish pressure, bearish U-turn. Bearish pressure is significant, U-turn is even more significant with big move down 3 at price extreme high and reversing. So enough reasons to hold the remaining position. Already booked partial profit if I traded it on Friday in the morning. I did not. Now question is, will I short it at the close on Friday? It could be shorted, but I'm saying it could be, not that I would have, because the distance is far away. But that is still okay, because distance far does not mean the risk has to be more. We could adjust the number of shares to use the same risk amount in the trade. So that is one way to short it. Another way I would prefer to short microchip at the close on Friday if I found it is to use short call vertical. I would use 45 days expiry or something around that depending on the expiry available. So 45 days to expiry, short call vertical would be my preferred approach in this case. So even if it tries to go up for a while, so long as it comes down later within 45 days, I'll have time decay in my favor and of course delta in my favor. The trade will end up in profit. So NVIDIA, no. Microchip, possible. Let me delete NVIDIA. Let's look at the next one, ONTO. I'll not short it because it has trend line support nearby. Delete that. MKSI, next one. I'll not short it because it has trend line support. That is the pattern we are seeing in the market. That is why many stocks are having the same pattern. Lam Research, semiconductor stock. Not short it yet because it has a trend line support. This is one of the two companies who helped the Chinese mobile giant Huawei to come up with a very modern chip. Lam Research. The other one was Applied Materials. If their business in China is affected by further regulatory restrictions, then this stock will come down a lot. Probably it was not under the radar like the European chip giant was. US tried to restrict export from those companies to China. This was probably not under the radar. So they helped Huawei, but now US has come to know if they restrict, then it has some distance to fall. AMAT is not in our list in top-down analysis, but let's look at that stock also. That was also in news. Applied Materials. This I would like to short. That's nice. I'd like to short it, okay. It has a breakout setup after bearish headwind cluster. We have a bear release, bearish traffic light at jump thrust high, price extreme high. Good enough reason for me to short. Weekly has also turned yellow and weekly has created a false upside breakout. Daily has a breakdown. So AMAT, let me add that too. AMAT, if I found it on Friday without thinking for even 2 minutes I would like to short AMAT, and I would prefer to use short call verticals if options are liquid enough. So if I have AMAT and microchip, both two, if I go back to LAM research, AMAT is looking much better than LAM research, LAM. So let me delete LAM research. Let's go through a few other stocks. I still have some minutes left before I hit 1 hour. AZTA has trend line support in daily. Weekly trend line support is broken, but daily has trend line support. See how I am effortlessly using them to decide my trades. Not going to short. Next one, WDC, Western Digital. This could be shorted. No, no, no. Could it be shorted? That was a question. No, because though the daily might have given a short setup, weekly is not meeting the checklist required conditions. So not going to short. I have enough trades with proper setup, meaning proper meaning weekly, daily both are meeting checklist conditions. Why bother to take trades where only daily is meeting the checklist conditions? If I just use daily, I am reducing my advantage. I have higher advantage, higher probability trades by combining all the forces, and I have plenty of them to take it. So I'm going to not short WDC. Next one, NEO, Chinese electronic, not electronic, battery car maker. No, sorry. This is not that NEO. I see Neogenomics. Neogenomics. It's too low in the price pattern. Daily has trend line support. Nearby, not very near, but nearby. Weekly has trend line support. Not going to short. Sorry, it's not the Neo automobile manufacturers. It's Neogenomics. Okay, but in any case, not going to short. Next one, Micron, semiconductor stock again. MU has a trend line support right below Friday's close, not going to short. And MOS, Mosaic, well, this is not going to be shorted also because of trend line support. I am left with three stocks. One, automobile manufacturer, Stellantis, STLA, breakdown short setup, this one, with bearish headwind at the top at price extreme. Let me point out the signals again. The bearish headwind at the top with a breakout setup with a reversal candle at price extreme high. Very low risk shorting opportunity, preferred instrument, short call vertical. Applied materials, semiconductor stock. If I had to choose between Stellantis and applied materials, I would choose applied materials. But of course, they are in different industries. What are the signals here? Bearish headwind cluster, indecision cluster, bear release at price extreme high, breakdown with bearish traffic momentum with a false upside breakout in weekly. So if I had to choose one of AMAT and Stellantis, again they are in different, I would choose AMAT for shorting. Preferred instrument, short call vertical. The third stock, microchip, also semiconductor stock, MCHP. Now if I had to choose between AMAT and MCHP, of course I'll choose AMAT because the candle is far smaller in size on Friday. So the stop would be less distant in AMAT, further away in microchip, but again we could adjust the number of shares, but they are in the same industry. So if multiple stocks I find to trade in the same direction, short direction here in same industry, I might choose the weaker looking one with lower risk, and AMAT is this one. Still MCHP is also tradable, and here even more than AMAT I would rather choose short call vertical, not short with the stock itself. That is how I carry out top-down analysis from Q edge, Q vital. If Q vital was responding, great. Otherwise, use Q edge itself. That is also how I use Q technical breadth for two things. One is the last step of my top-down analysis, like I carried out just now for Stellantis AMAT microchip. And also another way is to start with technical breadth, viewfinder, combine multiple signals. If I find trade setups, then further look at their industry weakness and fundamental weakness. That is how I found Stellantis. So I executed two workflows today. Other workflows are also possible. I am almost at 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next weekend's market recap. Have a great weekend. And as these live examples show, effortlessly you could trade high probability trades. As these examples show, there is no reason not to do that. As I always say, trade profitably. Thank you.